China's growth has slowed down and is stabilizing around 7.5%. But the PMI has been rising in the last few months, and Lilian Co, who runs the Strategic China Panda Fund, is here with us to look at the prospect of Chinese equity. Lilian, good afternoon.
Good afternoon.
Lilian, the first point that we'd like to cover is more macroeconomics. It's China growth, been a lot of talk about that, and the recent rise of the PMI.
Yes, actually the recent rise in PMI has given comfort to the market that China growth is not collapsing. And the target of 7.5% GDP growth set by the government is achievable. I think previously there were a lot of doubt about the 7.5%, but with the PMI ticking up since early this year, the market is now much more convinced that the growth in China is stabilizing. But having said that, it doesn't mean that we are in for a V-shaped recovery though. I think it is quite clear from the Chinese government that they want a stable growth. They don't mind a slower growth, but they want a stable growth. So whenever they see signs of further slowdown, they will come up with some stimulus measures to support growth. So I think we should not read too much into the PMI that, oh, China is in for a V-shaped recovery. I think it actually shows that the growth is likely to be sustainable. If you look at China from a top-down point of view, you may argue it's not exciting to be in China if the growth is only so-so. But I think it's actually the other way around. The way we see it is that investing in China is no longer a macro call. In the past, you would buy China because China had high growth. But I don't think that is the case anymore. Because China is now going through structural reform, we actually see a lot of opportunities arising during this process. That would include opportunities from SOE reforms. I mean, a lot of SOEs have announced restructuring and reform plans. If they are successful in executing the plan, you are likely to see a lot of value unlock from these companies or earnings improvement. So these are exciting areas for us. And we also see industries, new emerging industries, to be the major beneficiaries during this restructuring process. They include internet and environmental plays. So I think in short, we actually see more investment opportunities than ever in China.
And the other point, which is exciting for an investor, is that by all measures, Chinese equity is very cheap. Mm. Can you comment on this? I mean, you've given us some graphs here, which are quite interesting.
Mm-mm. But actually, that's quite right. If you look at MSCI China or Shanghai Composite Index, their market PE and PP are basically trading at a historical level, as you can see from these charts. Just take MSCI China, for example, is trading at about 9 times next year's earnings. It is actually quite cheap if you compare it to the regional markets. We tend to be trading at like mid-teens level. I would say there's been a lot of negativism implied in the valuation. That's why they are trading at dirt cheap valuation. But I think one can argue that they are cheap for a reason. And now my view on that is that, yes, they are cheap for a reason, but this reason is now well known to everyone. Mm-hmm. So let's look at what is not known to the market. And we see our SOE reforms and the new the new economies are really the exciting parts of the market that are yet to be appreciated by the investors.
And the dividend yield is rising.
Oh, it's also at historical high level, if you can see that. So by all measures, China is dirt cheap.
And it's dirt cheap compared to other Asia-Pacific
I think it's
areas.
dirt cheap by its own standard. Just looking at the historical trading range, it's also cheap compared to other markets. So any way you cut it, it's just cheap.
It's just cheap. Okay, now there is something very interesting that's coming up, and which will allow arbitrage opportunities between A shares and H shares. For those who don't know, A shares are traded in Shanghai and H shares are traded in Hong Kong. So can you tell us what's happening there?
Yes, actually, starting October, Shanghai's Composite Index and Hong Kong Stock Exchange will have a direct, how should I call it that, the direct mutual market access program. What's likely to happen is that foreigners will be able to buy shares traded in Shanghai Stock Exchange directly. And likewise, for domestic investors in China, they will be able to buy stocks listed in Hong Kong Stock Exchange direct. At the moment, Asia market is still a closed market, so you need a quota. Foreign investors need QFII quota to invest in A-shares. But starting October, with this program in place, no quota will be required. So foreigners can go China direct. But of course, there's still some restriction because there's a limit as to how much shares can be traded on a daily basis. So initially, there's still there's still limit, but we see this limit to be lifted gradually if this program is proven successful. And we do see arbitrage opportunities when this program is launched, because large cap A-shares in general are trading at a discount to the duly listed H-shares. I would say they tend to trade at about 15 to 20% discount to the duly listed counterparts. So we expect a arbitrage opportunities once this program is launched. But I think the most exciting part about A-shares is not just on this one-time arbitrage opportunity. In fact, there are a number of large cap A-shares that are actually trading at very attractive valuation by international standard. There are quite a number of well-known domestic names. For example, Qingdao Haier, that is one of the largest home appliance maker in China. They trade at about 8 times next year's earnings with 5% yield, and they have been able to deliver 20% earnings growth in the last 3 years, and yet they only trade at 8 times PE. And Qingdao Haier is actually a very reputable domestic brand in China. So by international standard, a good brand like that should easily trade at 15 times PE. So we do see big re-rating potential for undervalued large cap names like Qingdao Haier. So we see a lot of money is there to be made in A-shares.
Lilian, thank you so much for joining us today.
Thank you for having me.